Let's bring in Alan Nuckman, shift gears a little bit here. He's the chief market strategist at Agora Financial. First, the macro talk for a sec. He's down at the SIBO. Alan, good Monday to you, sir. Hope you're rested after, the holidays. Markets are looking a little
Merry New Year.
Yeah, a little bit less paranoid about the Iran thing this morning.
Anything new? Anything new in 2020 that we need to talk about?
TBD, I guess. Didn't all the traders just get back today?
Yeah, so just getting back into it. But what I see from the action, and it's very important that I've talked to you many times before, it's more about price than politics for me. So that way I can focus on risk reward, not fear. And I look at this as an opportunity. And after what happened last week, I'm very encouraged. We're down 0.75% on Friday, but still, let me say this again, had mixed markets on a weekly basis, still had the Dow positive on a weekly basis. So right now at this point, the market isn't showing that complete fear. The VIX is sitting at 15. It's a bit of a pullback, that's all.
All right, Russell 2000 is the underperformer today. There is still a little bit of a bid into the bonds. Obviously, gold's going wild right now, so it seems there are questions about this kind of economic recovery we spent the last 3 months discussing as, bonds were dropping, stocks were up. But you want to trade U.S. Steel, which is very economically sensitive, so tell me about it, Alan.
Well, first off, let's remember that we're looking at the macro market. It comes back to earnings. Earnings start again here on the 15th. So we're going to have that in our face to remind us how well corporate America is doing.
Okay.
And we're actually possibly going to have some earnings growth after many quarters of earnings recession. So let's talk about U.S. Steel. U.S. Steel is a stock that's been beaten and battered. It's dropped 40% in the last 52 weeks, but it's been trading in a channel between 10 and 15. So right now, I like it as it stands here. I see some smart money buying in this stock. The low on the year so far is $9.93, so I'm looking at an in-the-money option, my usual stock substitution strategy, limited risk. The March March $9 call, which is below that year low, and actually is the lowest. We haven't been down to $9 since, 2016 or something. The $9 call is trading for about 2.25. It's $1.75 in the money. So the break even on this is 50 cents higher, but you've got 75 days. And if you look at the chart pattern there's a very attractive, enticing is the word I'm going to use, gap at 12.50. If it gets to 12.50, which is not far away, this option would gain 50%.
All right, so U.S. Steel at $10.74 right now. It looks also like it's pretty much on the lows. So I imagine, given the focal point of steel and aluminum as being, the big tariff risks and geopolitical economic risks, that it's probably going to take a lot to really break this thing past levels that it was at during some of those heightened periods of risk.
Yeah, that's the thinking. There's a very, very strong level of support at $10 you can lean on. The March option has time. The indicator I use here looking for this money flow is see something happening here in the near term in the next couple of weeks, but I'm buying a couple of months at a time just because the options are so inexpensive. Again, it's an in-the-money play. Instead of tying up money to buy the shares, even though the shares are only $10, you can buy the options and lay out much, much less capital and have completely limited risk. And if we see U.S. Steel back below the $9 level, then we probably have bigger problems that we need to be talking about.
Yeah, all right. Alan Nuckman, appreciate it as always from Agora Financial at the SIBO. Thank you, sir. Trading U.S. Steel for a bounce.